together, the industry and the players will need to define a sustainable long-term path, and we will be there to provide the funding alongside the financial partners. AFREXIMBANK is cognizant of the impact of the global energy transition, and that impact, what it's currently having across investment philosophies with IOCs and also financial institutions. Noting Africa's large hydrocarbon resources base and the dependency of African economies on these resources for fiscal and forex revenues. The bank recognizes the need for a framework that enables continued investment in the continent oil and gas sector, while also working on ways to combat the climate change. Africa has over 125 billion barrels of proven crude oil reserves and hundreds of trillions of cubic feet of proven gas. And more findings are yet to be made in various regions of the continent. African countries are heavily dependent on foreign capital, technology, and expertise to explore and produce the oil and gas assets. The dependence of the industry on foreign factors poses a serious risk in terms of viability. And we need to really think about it and have some solutions. The oil and gas infrastructure in the continent requires continued, I repeat, continued investment to enable it to sustain the requirement of an industry that keeps on evolving. And such optimum technologies are required for efficient and sustainable management of the resources that we own. Africa is highly dependent on imported oil products at the same time. In fact, by 2035, the Middle East, North Africa, and the former Soviet Union are expected to supply most of the oil and gas demand for oil refined products. If concerted efforts are not made by African governments to revamp existing refineries, establish greenfield refineries for their own, this also poses another serious danger for energy security. And we are all watching TV these days between two neighbors. So energy security is something we need to really ponder on. Exporting natural resource generates a significant source of government revenue for sub-Saharan African countries, such that natural gas, crude oil, metals contribute on average approximately 25% of the region government revenues. 25%. That's across many African countries. Export of hydrocarbon fossil fuels comprised over 48.5% of sub-Saharan African export value between 1995 to 2018. The export structure has changed substantially over the last decade, with the value of the fossil fuel declining sharply and that of mineral energy climbing sevenfold since 1995. Given that nearly 50% of sub-Saharan African export value is composed of fossil fuel, the global energy transition may have profound effect in our economies. The United States, Canada, and 18 other countries committed at the recent COP26 Climate Summit to stop stop public financing for fossil fuels projects abroad by the end of 2022. There goes a deadline. And steer their spending into clean energy instead. Countries that signed the pledge together invested nearly $18 billion on average each year in international fossil fuel projects from 2016 to 2020. Several oil and gas projects in developing countries can be affected due to the reduced investments. While noting the adverse effects of climate change on environment, Africa's carbon emissions are impressively low. 4% to be precise, 4% of global climate emission. In the meantime, in the same residencies of 54 African countries, you have 17% of the global population. As you can see, there is a massive gap. Africa's fossil fuel are focused on developing infrastructure, providing more access to education, and building housing, industries, services. And like the developed countries of the West, African countries still need to rely on fossil fuel for growing and sustainable development. There is a need to continue financing oil and gas in the continent to avoid destabilizing African economies due to a sudden reduction from Western financial institutions. This unplanned shift for African countries is not welcome. There is also the issue of energy poverty. A good friend reminded us that over 600 million people across the continent still live without access to modern energy. With energy demand in Africa expected to grow by 50% over the next 2 decades, there is genuine opportunity to leverage the continent's large hydrocarbon resources base to permanently address the issue. All these factors together facilitate the creation of a framework to attain long-term energy sustainability and sufficiency on the continent. For it to be successful and have the desired impact, the framework must transcend at all facets of the industry, upstream, midstream, downstream, while also leveraging the transition characteristic of natural gas. To have the desired impact, it is important that ultimately the funding platform be developed, and that platform developed must have strong technical capacity, operation, commercial, risk management, regulatory experience across the African energy value chain, complemented with broad international experience to enhance African energy agenda. AFREXIMBANK has played a key role in the African oil and gas industry since its establishment. Just by a few figures, by the third quarter of 2020, our total outstanding loans was around $4 billion. By the third quarter of last year, that number had crossed $5 billion. And as you've heard from the distinguished guest, over the last 4 months alone, we've completed $1 billion for NNPC. We've signed a $5 billion agreement with NNPC. We've signed an MOU of $5 billion with UTM to meet our distinguished friend, Mr. Julius Rone, and also the group BOI that was mentioned. We just organized a 700 million euro bond for them last week. And these are just to name a few, but our commitment to the sector is absolute. The bank upstream financing support has assisted also acquisition in oil mining licenses for a number of producing assets here in this country and overseas, for drilling and new wells to ramp up production and construction of surface production facilities here and overseas. The midstream financing support has also cut across construction of pipelines, storage facilities, marine assets, barges, tankers, you name it. In a bid to leverage the global financing into Africa, we have also led some of the largest syndication in the sector. In fact, the largest refinery in the world, which is the Dangote facility, which has been shown earlier today, we are today the largest lender in the globe on that facility, with well over $1 billion. We also are the leading syndication group for the continent, oil and gas being one of the key sectors. The bank remains keen to continue supporting the financing of economically viable oil and gas transactions across the continent, given the oil and gas accounts for a substantial portion of the bank's portfolio. There's a need to find a careful balance on how to continue financing projects in the sector sustainably. The bank does recognize the need to partner with African economies, national oil and gas companies, sovereign wealth fund, private sector, DFI, and other institutions to achieve this balance. And as you've heard from my good friend, Secretary of APO, we're working very closely with them in all of their efforts to make this a reality. Today's event provides a great opportunity to advance this conversation, and we are pleased to have been invited to participate. AFREXIMBANK expresses its appreciation, gratitude to all other oil and gas industry stakeholders working alongside APO and Ncdmb to further develop the Africa oil and gas industry. The bank is committed to working alongside all stakeholders to explore the feasibility of the African Local Content Development Fund. We thank you sincerely and wish you all a productive and engaging session. Thank you very much.